So friends, right now we are on the FII-DI open interest data analysis. So this is the data that I have compiled for 22nd of April. So right now we are on the economic calendar. We are going to quickly view the high impact calendar economic activity events for next week. So starting will be the, so this is the weekly time frame, and here we can see that the recent week this is a doji candle, so the open interest data. So here we can see that there is a immediate open interest buildup in the Nifty options. So we can see that on this here is my Nifty options weekly expiry for 28th of April 2022. So to implement this strategy, this is a modified. For this I have considered 36,100 call and put. So here if we observe as on 22nd of April 2020, so friends, right now we are on the FII-DI open interest data analysis. So this is the data that I have compiled for 22nd of April 2022. So on this day we can see that the clients are holding 60% long position in the index futures, but whereas the FIs they are long only by 47%, and the proprietors they are long by 35%. And the combined data of the FI plus proprietors, here we can see that the data says that they are only long in the index futures by 43%. So when I tell the index futures, it is the Bank Nifty future and the Nifty and the Fin Nifty. So here we can see that when in compared to the 20th of April 2022, so here we can see that they were long by 50% and they have reduced by almost 7% in their long positions in the index futures. So now coming to the index call options now, here we can see that the clients are holding 50% long positions in the call options, but whereas the FIAs they are holding 58% and the proprietors they are holding 45% long in the call options, and the combined data of FIA plus proprietors they are long by 49%. So now we are going to see the option index put option long positions. The clients are holding 44% long and the FIs they are holding for 69% long here, and the proprietors they are holding 51% long. So the combined data of the FIA plus proprietors, we can see that they are holding 58% long. So if we just observe the FIA plus the proprietors data here, we can see that they are long in the index futures by 43%, and they are long in the call options by 49%, and they are long in the put options by 58%. So this is a clear indication that they are bearish in our Indian stock market, at least for the index futures and options. So right now we are on the economic calendar. We are going to quickly view the high impact calendar economic activity events for next week. So starting will be the 25th of April 2022. So here on this day we have one important event at 1:30 p.m. This is at the Indian Standard Time. So this is the IFO business climate for the month of April, and this data will be released by Germany. So the next important event will be 26th of April. The two events that is occurring is from the USA. So the first event will be starting at 6 p.m. Durable goods order for month of month. This is the data for March, and the new home sales, once again the data is meant for the March. So the third day, that is Wednesday, the 27th of April 2022. Here we can see that at morning 7 a.m. we have one important data, the inflation rate year on year for the Australia, and the second one is the Germany GfK consumer confidence. This data will be released at 11:30 a.m. So the 11:30 a.m. will be our market time. So even if this particular data is going to affect our market, then you need to be careful with your open positions. You can hedge your position, suppose if you are trading the future and options. So on Thursday 28th of April we are having three important events. First event will be at 8:30 a.m. So this is before the market opening, Bank of Japan interest rate decision. So the second one is at 5:30 p.m. inflation rate year on year, and the third one is at 6 p.m. GDP growth rate quarter on quarter. So these three events, first one is by the Japan, second one is by the Germany, third one is by the USA. So on Friday 29th of April, we are having a series of high impact events which could affect our Indian stock market. So the first important event is starting at 11 a.m. GDP growth rate quarter on quarter, and followed with the inflation rate year on year, the GDP growth rate year on year. This is for Spain. So they are having almost two events, followed with the Germany GDP growth rate quarter on quarter, and followed with the Italy, the GDP growth rate year on year. So once again we are having the GDP growth rate, inflation rate, followed with the inflation, the GDP growth rate year on year flash. So this will be for the European area, and finally followed with the personal income month on month for USA, and personal spending month on month. So this both data will be released at 6 p.m. in the Indian timing. So this would affect the commodity markets. So suppose if you trade in the commodity market, you need to hedge your positions before 6 p.m. so that if there is any untoward incidents or if market is moving against your positions, you can reduce your losses by having a stop loss or having a hedging position. So friends, right now we are on the Nifty spot index here. So this is the weekly time frame, and here we can see that the recent week this is a doji candle. So this is indecisive candle. So not even the buyers or sellers, they are in control in the last week, and we can have a stop loss, the support level at 16,844 levels on the weekly time frame. Suppose if Nifty is going to cross below 16,844, then we can consider that the bearish trend is continuing for a target of almost 16,148 levels and 15,653 levels on the lower side. On the upper side, we can have a resistance of 17,394 levels, and if this level is broken, we can expect a target of 18,146 levels on the first target, and the second target will be 18,512 levels. So next week in the Nifty future, we can expect a maximum movement of 631 points. So right now we can see that the Nifty has closed somewhere at 17,171 levels. So this is the spot Nifty index. So if we just minus 631 points from this level 17,171, we can expect a downside movement up to 15,500 levels. So this is also a support of 15,876 levels. On the upper side, we can see the target of 631 levels from 17,171. So we around 17,600 or 17,700 will be a possibility if Nifty is crossing above 17,414 levels. So you can make a note of this support and resistance on the weekly basis. Suppose if you are a swing trader or even if you are an intraday trader, you need to have these two important zones. So right now we are on the Nifty open interest data. So here we can see that there is a immediate resistance at 17,300 strike price and support at 17,050 levels. So these two will be the important strike price that you need to observe. The 17,000 levels will be the immediate support level based on the open interest data analysis, and 17,300 will be the immediate resistance as per the last closing, that is the 22nd of April 2022. So we can also observe the open interest buildup in the Nifty options. So we can see that on the put side, we can see that there is a long buildup that has happened up to 16,150 levels from almost 17,050 levels, and 17,100 we can see that there is a short covering happening. The short covering means that most of the traders who have taken the short positions from almost 17,600 to 17,100, now they are covering their shorts, which will trigger the market to further go down, and that is where we can see that the long positions is built up at till 16,150 levels. On the call side, here we can see that there is a long unwinding happening at 17,000 strike price up to almost 16,500 levels, and the short buildup is happening from 18,200 levels to almost 17,050 levels. So by considering the open interest buildup, we can see that there is a big tendency that the next week the Nifty will be in a bearish trend. So friends, right now we are on the multiple open interest chart analysis, and I have considered 17,200 strike price just to understand whether the put options rating is more or the call options rating is more. But when we observe the multiple open interest chart analysis on the 30-minute time frame, here we can see that the both put and call is getting neutralized. Still, as of now, still we cannot understand whether the call rating is more or put rating is more, because there is a neutral that is happening here. Right now we can see that both the put and call is been written around 3.4 million, and the PCR here, if we observe, it is at 0.96%. So still I cannot see a clear indication from the multiple open interest chart analysis. Probably when the market opens Monday, then I'll be in a right situation or position to understand who is controlling the market, whether the bullish or bearish, based on the maximum writing that is happening in the 17,200 call and put. So friends, here is my Nifty options weekly expiry for 28th of April 2022. So to implement this strategy, this is a modified iron fly. I just given some changes in this strategy. So when you implement this strategy, the probability of profit will be 64.87%, and the max profit that you can expect from the single lot of this strategy will be around 6,000 rupees, and the max loss will be 3,882. So here the max risk to reward ratio is 1:1.56, and the break evens will be 17,322. And the lower side, you will not be taking any losses, because I have constructed the strategy in such a way that if the market is going down even to 15,754 or 15,600 levels, you will end up making profit of 1,118 rupees. And on the expiry day, if the Nifty is expiring somewhere between 17,096 or say 17,181, then you can make the maximum profit of around 6,068 rupees. So the net credit you'll be receiving is around 6,117 rupees. Estimated the margin or premium required will be 46,168 rupees. So suppose still if you're not open the Demat account, or you want the customized option strategy on the weekly basis, you can WhatsApp me with the number that is displayed in the video. So friends, right now we are going to analyze the Bank Nifty open interest analysis. So this is for the weekly expiry of 28th of April 2022. So on the considering the open interest, here we can see that the immediate support is at 36,000 strike price, and the resistance is at 36,500 call. So if Bank Nifty is crossing below 36,000, the strike price is successfully broken, then we can expect a further target of 35,500. Likewise, on the upper side, if the Bank Nifty is crossing 36,500, then we can expect a target of 37,000. Now we are going to see the open interest build-up. So on the PE side, we can see that there is a short covering happening from 36,900 to almost 36,500, and the long build-up is happening at 36,400 PE till almost 32,400 levels. So people are bearish in the Bank Nifty, due to which they have taken the long positions on the put options from almost 36,400 to 32,400 levels. So this is a very say suppose if the put option buyers, if they have to get profit, in that case Bank Nifty has to make almost 2,000 or 3,000 points, because right now it is somewhere near to 36,000 levels. And if we see that the long buildup is happening till 32,400 levels, so we can see almost 2,800 points. Bank Nifty need to go down further to more than 2,800 points, only then the put option buyers will be making profit. On the call side, here we can see that there is a short build-up that has happened from almost 39,900 to almost 34,500 strike price. Now we are going to see the multiple chart analysis. For this I have considered 36,100 call and put. So here if we observe as on 22nd of April 2022, here we can see that there is a call rating is more when compared to the put options, and open interest data, here we can see that the call open interest is at 4.61 lakhs on the call side, but whereas on the put side it is 4.31 lakhs. So tomorrow on the Monday morning we can see that the confirmation of this multiple open interest charts from which we can take our trade. So friends, now coming to the Bank Nifty the option strategy, here is my recommendation that I have implemented the modified iron fly weekly strategy for the Bank Nifty expiring 28th of April 2022. So to implement this strategy, all that you have to do is sell one lot of 36,100 put and 36,100 call, and then buy 35,900 put and also buy 36,400 call. So right now the premium what you are seeing, this would definitely be changing once the market opens on Monday morning. So the probability of profit will be 59.93%. The max profit that you can expect from single lot of this strategy will be 5,694, and the max loss is around 1,851 levels. So the max risk to reward ratio is 1:3.04 levels. So break evens will be lower side, it is 0, because if Bank Nifty, if there is a big crash that will happen even on Monday, even then once you implement this strategy on Monday morning, after until the expiry, if the Bank Nifty is crashing 2,000 or 3,000 points, you will not be making any losses, but you will be making a profit of around 500 rupees to 600 rupees for single lot. On the breakout is 36,325 levels. Say suppose if the Bank Nifty is crossing 36,325 levels, then there is a possibility that you may be making a maximum loss of 1,851 levels, 1,851 rupees. So the net credit that you will be receiving will be 5,648 rupees once you implement this strategy. I am talking about the one lot basis, and the estimated margin or premium required will be 45,619 rupees for single lot basis. Say suppose you have any questions in this strategy, you can leave me your questions through comments. Also you can WhatsApp me with the number that is getting displayed on this video. And also if you want any customized option strategy for weekly trading, that is like without making any losses, then also you can WhatsApp me or ask me your questions directly so that I can clarify your doubts. So friends, thank you for watching this video. Please do like this video, subscribe to my YouTube channel. Also watch my latest other videos which will give you an in-depth view about the option strategies and other technical analysis.